Hello, friends. Let's look at the market update for today and what are we looking at in the market. Of course, we've said at the beginning of the week, we said we're bullish for Bitcoin and we still continue being bullish. However, even when the market pull back, we're just telling us to be aware of what you're expect to have in the market and all of that. So quickly, let's look at the market. Are we still maintaining our bullish, component of the market? Yes, absolutely yes. Yeah, the market is still bullish, right? I've told you guys that my target for the market for us to get to 95, 94, $96,000. And so if we're unable to get that place broken, then we're going to have a massive dump, as it were. So we're still on board and we're still on course and look at it. And then, but for us to get the strength to much confirm, I told us I want these two guys to break above this my line. That's above 20 stochastic RSI and all of that. So, but are we still bullish? The answer is yes. So we'll still continue being bullish as the market continue and all of that. So sometimes people don't even just look at what market is doing. We look at the high people creating and talking so much about the market going to push back, market is going to push up and all of that. So you have to have an understanding of what the market is doing and then you want to pay attention to it. Okay. So, ladies and gentlemen, I was still bullish. Like today, I was able to take some long positions on Bitcoin. Now, if you are doing maybe short trading, maybe just like, especially when you are trading crypto on Forex platform like on MT5, and that was a very wonderful trade this morning and all of that. And even if you are trading future trading, just to catch like how many few percent, maybe 1.2% and all of that. And so with 10 or 20x, that's about 20% of whatever portfolio you are trading with. Let's say you are trading with $500 and then you have 20% of $500. That's something reasonable and all of that. So perhaps these are the things that you need to have an understanding about. Okay, so quickly, let's look at the market again overview. Um, Many will ask me, I've come to realize something very importantly that a lot of people don't pay attention to what works and what give us dimension of opportunity. And so that's why we are just doing business anyhow and all of that. So, but before that, I quickly need to share with you, right? So now, so I got into the market today and I saw the dimension at which the crypto, Bitcoin especially, was doing. And so it was pushing ahead to break this point and all of that. So, but nevertheless, like I've told us before, I told us we bounced and then we bounced here. There was like a gap and we filled it properly. Okay, we didn't fill initially, right? It was partially filled initially, which was here, and we returned back up here, and then we got it filled to the core, and then even grab liquidity as it were. And now also the market continue today come to be indecisive market as we have. These are key level, and then we have gotten to that point, got rejected, and then another rejection, which are the doji, and if you can close with this bullish candle today, and that's going to make a lot of sense. But where you want to pay attention to again is about 89, $90,000 region, which is a kind of channel in between. So if the market gets rejected either here or here, then it's going to be a problem. So, but without that, we can get to about that 92,000 is sacrosanct. That's another key level, right? To 93, 94, then up to $96,000. And then, man, if we get there and there's no way for us, then we're going to plumb back. So for me, you don't need to bother about what the market is doing, just to follow the trend and make it your friend. Now, as simple as possible. And most time I'll tell people when you need to be very careful is when people are greedy, and that's what we tell people. And so pay attention to all of those opportunities. They are very important. And then so I'm going to share with us more stuff so that we can leverage on things. Now, but very quickly, I want to let you know that um, doing a career path in this crypto space or in financial market, I put up in the PDF here on our group, it's a global path, a career path on global financial market requirements and guidelines. Okay, it's a global financial market, right? It's a multi-trillions business opportunity industry that gives a fair play to everyone to participate and access financial stability, security, right, independence, and freedom. It's therefore crucial to identify your category of participation and know where to get started, all right, in order to scale into your desired long-term target. So you need to be aware that this industry has both established and emerging markets that can feed the desire of every participant. So we have capital market, money market, commodity market, forex market, derivatives market, volatility indices market, and then cryptocurrency, which is the emerging market. So two major things are required to participate in this multi-trillion dollar industry, and these are money and skill set. So you probably may not have so much money, but if you can build a skill set, is very important. When I say prerequisite, basic training for skill set, access to valid and current valid, right? Valid and current valid updates and information, access to a good objective and sound mentor, right? So hand on the job, selection of the market to face, whether forex or futures or spot or synthetics, you need to identify which one. Selection of activity style and all of that. So these are just basic things, and then come into like steps to treat trading as a career. Now, other than this, we equally have training categories for forex training, for crypto future training, and synthetic. These three sacrosanct trainings are available that you can participate in, all right, to be able to develop yourself. And so other than that, so we actually let people know one thing, that market, you can face the market by following, we have what we call price action support resistant trading strategy. It's very, very effective that you can use to trade your market as much as possible. Are you getting it now? So the opportunity that abound in this space is so large, and so you don't need to feel, okay, nothing is happening and all of that. No, it's very amazing, and you can make a lot of good money to help yourself, as it were. All right. So now looking at the market, for instance, we have said the market was, this is what it's doing, and then the Bitcoin. And now for those of us who trade different instruments, so basically, what am I supposed to be doing when I wake up and all of that? Look at gold. That was a fantastic one. I actually bought up gold today, and then it gave me a very nice profit. And I've been telling us about using MACD as as an indicator, but not necessarily what we are depending on. So many persons, this is where we misrepresent indicator. And I listen to some educator who tell you that indicator does not work. That's not true. Indicator works. The challenge we have is that many persons actually hope on indicator as the major things to decide their trading entry and exit. This is where we get it all wrong. Indicators works. Most time, for instance, exactly, volume indicator or momentum indicator like MACD, RSI. These two indicators are very amazing. Even stochastic RSI, they're very amazing for casting market. Not a guarantee, but a probability that the market could do this and all of that. And so that's why most time when people meet me at, I cancel them. Indicator works, but the way we use it, we actually abuse it. You can imagine when somebody is just going to depend on, okay, when the indicator moves like this, I enter like this. No, it's just like a confluence. You add it to consolidate, your bias and all of that. So now, so what I use, especially for beginners, I always tell beginners to go into basic support and resistance strategy. But for you to be effective in that, that means you need to learn to understand market structure. You need to understand, all right, what are the components of market structure. For instance, what I gave here, let's look at it this way. So I'm talking about the components of market structure: candlestick, chart patterns, market structure, support and resistance, trend lines and channels, liquidity and imbalance or displacement, demand and supply zone, volumes and key levels. These are the major components. There are more, right? But these are the major components you must really understand if you want to be very, very profitable as a trader, or you want to really call yourself a professional trader. It doesn't really matter either you're a professional, but profitable trader is more pronounced. That I really need to be a profitable trader, because someone will say, oh, because you don't know this, you don't know SMC, therefore you're not professional. But the question I ask is that, are you making money and can you repeat the wheel? Then you are a profitable trader. So you must understand all of those segments. So you can see what gold, I've been doing, and someone have bought and then sold gold and expecting the gold to actually get to a particular level. Well, however, one of the things I'm still scared about, it still have some liquidity left behind, which can bounce from this point to go and take the liquidity and still return back But before then, somebody must have made a lot of money if you're following your strategy. Are we together? And so, most importantly, what do we do in this market? So, quickly, if I just disable all of these so that we can see a plain chart. Okay, so here is a plain chart, and here is how you trade. So, if you're a day trader, what you want to pay attention is very simple. Now, if you're a day trader, however, it is expedient you understand the dimension at which market is going, right? But above that, you need to understand that if you're a day trader or a scalper, you want to work with time synchronization. For instance, if I want to be trading as a day trader on 5 minute time frame, I'm going to have business with 1 hour, all right? So 1 hour is going to be my external liquidity. And so that I go like this and I go to 1 hour time frame to see the market. And so what exactly do I want to do on 1 hour? So let me take up all of these. So I am going to come in to 1 hour and probably I want to check some of those liquidity area that market is likely going to be attracted to. You get it? So for instance, you are just coming now, you're looking at different liquidity area. For instance, I come in, I'm going to mark this point because this is like the current swing high. Okay, probably going to reduce this to make it very slim. All right, then I go again down to this point. It doesn't matter what instrument. This is gold, for instance. That is gold, that is Bitcoin, whatever market. Now, I want to go by extending to far extended or external liquidity. So where's another obvious probably, so I probably can go to this low here, right? So that I can have that if you want to be trading on 5 minute time frame. If you want to be trading on 1 minute time frame, you can do what I'm doing on 15 minutes. Okay, now I haven't done this, very simple. I'm looking at, okay, where's the market likely going to attract to? So if you had come in early enough, you will have been looking at liquidity up here, right? Before the market actually rallied up today. Now, there we go. So we're going to slam down to 5 minute time frame. And then you probably can find all of these to have an idea where is the market slamming to right now, right? So where is it coming from and where is it going to? Now, however, this is like a kind of a support level that the market ought to have respected. But this time around, the market is already going down. So the question you ask me, Felix, can I go ahead and sell gold now? That's where you miss it. I am not going to sell gold any longer because the movement is already happening. And of course, the market, I expect probably the market to return back to this point. So what I expect the market to come and do here, either to grab liquidity or when it breaks this and about to and retested it, I will shut the market down to the next liquidity area. Are you getting it now? All right. But of course, there are things you will pay attention. I'm just giving you the basics. Okay, I'm just giving you the basics. I'm not going to detail of what we call it do as much as possible. But this is it. But for anyone who come in the morning, will have found the market, and probably when he enter the market from here, is going to be taking profit from here. And however, the profit taken was nice, and then the liquidity was grabbed, and the market is crashing down. Now, this is an external liquidity. This is an external liquidity. This was internal liquidity. This was internal liquidity. And so you expect this internal liquidity to be grabbed because this first was grabbed and then the next. And sometimes, if you are trading Forex, you actually want to wait until a particular trading session. However, like London session and New York session actually are interwoven. So they breach into each other. And so finally, you can trade continuously from London section to New York session and you still be fine. All right. So, and that's what it is. And this guy just continued to move in that direction. So let's go. Can I go ahead now? I can't do anything. The only thing I can do now, there are things I will need to check for the candlestick pattern that will play out, that will change my mind to want to now long this market. But for now, it's better I wait for the setup to come to me and I'll pick it. So let's look at Bitcoin. So we're going to Bitcoin, and then we're going to look at Bitcoin. So let's go to 1 hour, for instance, if you are a day trader, a scalper, whatever. And so go to 1 hour, and I'm going to do this. Obviously, these are an uptrend, right? You already know that this is an uptrend. Okay, so perhaps I'm going to take maybe just a close one, right? This is a swing low down here, this part here. So let me extend it out. And then this is another one here. This is a far external. All right. Then I take another one here. Just obvious liquidity area. All right. The immediate one here. All right. So what is the narrative? This is another point here. These are liquidity area where you know that the market can actually travel to. The old swing area can be here because market can interfere with there and then probably you didn't pay attention to it. Okay, so I've just done all of this. These are mapping and all of that. So this is another one. So, but it will be too much. That's if you are a day trader. So now, what am I going to do? Very simple, right? You found another one here, but so let's go. Now, what am I going to do? Very simple. I go to 5 minute time frame. Oh, good. So in 5 minute time frame, so we actually find that the market actually starts from here and now traveling somewhere. Okay. Now, so this guy is traveling somewhere. So this guy on 5 minutes has traveled very well and all to get up to this point. Okay. So the question asked me, fellas, what am I going to do? Now, this guy is already flapping down, which likely going to get back to this point. But so let's look at it. Where can it correct to? Yeah, I can still take 5 minutes retracement from this low to this high and probably find this area or this area or this area. So can I sell? So, because there are times you come, the setup you are meeting is not your own. Okay? The setup you are meeting is not your own. You just have to now find another one that's going to grant you your own. All right? If you go to gold now, for anyone who come in and do what I'm doing earlier enough, because somebody was chatting me, so I see this, I've sold gold, and I say, yeah, you are in order. And the only thing I told him was that pay attention to the external liquidity, but just follow the trade, use the stop loss, and then continue to ride the market down. And I'm sure he's in massive profit. And I told him targeting 3018 and 3016. Let's go. Let's look at it. Massive. Can you see now? Massive. This person is already rocking in massive profit. Come on. And I'm sure it's going to collapse all of this. It's rocking up. So another thing I have to warn many of us, if you are a trader, is that once you pick an instrument at a time, face that instrument and maximize that instrument for that period. It's very, very important. So that's how you can make a lot. Okay, imagine when this fellow have shot a gold from here. At this pullback, he add more position. At this pullback, he add more position. And then this is a displacement. It's very, very possible that's going to do. So that's why I was telling him at about, that 318 and 316, which are that region. And then if you can do that, grab liquidity, then it's looking for another buy. And that's exactly what you're doing as a day trader or a scalper. And I can tell you, you can make a lot of money, following that procedure because this is support and resistance strategy and vis-a-vis paying attention to liquidity movement so that you can maximize your profit. Okay. So quite unfortunate that sometimes we don't pay attention to all of those important things, right? So if you go back to, let's look at NAS 100. So those of you who are trading Forex, someone say, he's just talking about Forex all this time, right? So let's look at it. All right, so Okay, so let's go here. So here we have this an external. So we're going to mark this guy out. So if you do not understand, I think there's a need for you to attend our academy. So for proper education. Right? Right? So let's go. So I take this external, take this swing high here. So because once you identify all of this region, now when you are trading your support and resistance strategy, it's going to be very, very effective for you. So this guy here, this region collide with this. So I can just take everything all together to save myself from unnecessary stress. So I take this one out. Okay, let's quickly go to 5 minutes. There we go to 5 minutes. 5 minutes. Can you come up? All right, amazing. So let's look at the 5 minute. So now, having marked all of this, for instance, assuming you were selling right from here, and the market, that's another breakdown here. Retest, retest, massive retest, and still continue going down. So you know that this guy, your next target is this point. So you may ask, hey, Felix, why don't I just find a position? Why will you find a position? So you get to a place where you can pick up. You know, you were a scalper, you were scalping, right? Because you can invariably say this guy is going to come down to this point. Now, to confluence and support your argument, that's where you now want to check your indicator. And but if you look at your indicator, you will have been able to add more position to know that actually this guy was returning down at this point to the same thing. But at this point now, you can be confused because momentum is trying to say, we're about to return up, all right? And after all, you have a low below this, but you can invariably say this low is going to be grabbed, all right, and market sell down to this point. So you want to pay attention to when it sell down to this point, that's going to bounce or it's going to whatever thing you want to do there. Okay. So whatever it's going to do there, you want to pay attention. So, but for me, I will have shot from here, and that will have been a massive profit, right? So let's look at it. You know, these guys have so much volume. Let's even say to this key level. That's 31 pips. Yeah, that's 31 pips. That's a lot. 35, let's say 34 pips. That's a lot. And then let's say you use 0.1, that's 34, $35. So if you use let's say 0.5, yeah, okay, or use 0.1, all right, 0.1 and in about 3 positions, right? That will have given you so much. And for someone who has started from here, even to that point there, that's 46 pips, right? So, ladies and gentlemen, so pay attention. You can see the market is still rocking down. I've told you that you expect the market to return to this point. I don't. This can be very dangerous most time when you want to try to. Okay, so the network is bad. Let's refresh. Okay. So you can see that actually got into a key level. All right. So, but you can see this is another, liquidity. So it's always good you enter at appropriate time, not when you finish entering. The market start dialing, giving you another scope. Right. So these are liquidity, and all of that. So finding entry here, that was like an amazing one, and all of that. Okay. So I thought I was going to get into the market. All right. So that's it for trading, following your strategy, working on your pattern, and patiently wait for them to come to you and you execute your strategy. Right? Does that make sense? Yeah, I think it does. So if you have not signed up on AKASHX and you are trading Forex, I personally recommend AKASHX for anyone who wants to start coming into Forex trading. Why do I recommend that? Because it gives you a lot of unlimited, or it gives you unlimited opportunity. Number one, training. Number two, support system. Number three, funding and other things. So you're able to. I just have a student or a client or a mentee that just passed challenge account of, oh my God, challenge account of challenge account of how much? 1,000, 200,000 challenge account. Yes, you heard me right. That's what somebody have just passed on AKASHX platform. All right. So please, you want to be part of our ecosystem, you can chat with me. Then we'll give you all the necessary requirement that it entails, and then we can make one together. Thanks and bye-bye.